to a little bit of the positive. How about that? So Pump.fun meme coins are dying at a record rate. Less than 1% survive. And this is kind of like my point. Everything's turning into essentially a casino. The meme coin frenzy on Pump.fun is hitting a wall, with the platform's graduation rate sinking below 1% for a fourth straight week. Graduation rate is the meme coin launchpad's term for tokens that make it through the incubation phase and become fully tradable on a Solana decentralized exchange. To graduate, a token must meet specific liquidity and trading requirements. I bit my tongue, so give me a second while I mumble through this. Over the past 4 weeks, starting February 17th, Pump.fun's graduation has remained below 1% for the first time, Dune Analytics data shows. Pump.fun's graduation rate has never been particularly high. The platform's best performing week was November 24th, when 1.67% of meme coins moved onto the open market. However, the sheer volume of tokens launched on the platform at the time made this percentage more significant than it is now. So not only are we seeing a decrease in the graduation number, but in the total number of tokens being launched. During the week, starting November 11th, 323,000 tokens were created on Pump.fun, meaning the 1.67% graduation rate translated to roughly 5,400 tokens entering Solana's DeFi economy in a single week. With token creation volume declining on both Pump.fun and Solana, weekly token graduations have plummeted to a 4-week average around 1,500 tokens at the time of writing, according to Dune. Pump.fun's dropping graduation rate reflects the waning investor appetite for meme coins, which have developed a reputation as degenerate lottery tickets or quick cash grabs for their creators. Several political figures have launched their own meme coins as well, including U.S. President Donald Trump. His token is down 84% from its all-time high set on January 19th, according to CoinGecko. Meme coin struggles persist despite improving liquidity, according to Matrix Port. So here's the other interesting thing to point out here, and it goes to back up what I've been talking about, which is that we do have more liquidity coming into the market, but it's getting sucked up. So even though liquidity is increasing, the total, like each individual project is performing worse because we are essentially sucking it up with just the sheer amount of options in the market, right? Since then, the US dollar has weakened. Over the past month, the US dollar index, which measures the dollar against a basket of major currencies, peaked at 107.61 on February 28th before dropping to 103.95 on March 14th. The US dollar has recently weakened, leading to a rebound in liquidity indicators and some marginal improvements in inflation data. Despite these positive shifts, meme coins, previously one of the strongest narratives during this bull market, continue to struggle significantly with no apparent recovery, Matrix Port said in its report. The struggling meme coin market has contributed to a $1 trillion wipeout in crypto market capitalization, according to Matrix Port. This redistribution of wealth may lead investors to remain cautious about deploying further capital, causing rebounds, even those triggered by better than expected inflation data to be limited, the report noted. Matrix Port analysts warned that this could lead to further Bitcoin declines, with potential retracement as low as 73,000, a level they would believe would provide strong support. Now, the reasoning behind this is kind of interesting, right? People aren't pulling out of meme coins into Bitcoin anymore. And this is something you should pay attention to. So in previous markets, you always had a tie between Bitcoin and every single cryptocurrency available. But like we talked about last week, the move in cryptocurrency recently has been outside of centralized exchanges and into Phantom Wallet directly. And this move also means that people have faster access to offboarding their cryptocurrency from Phantom Wallet directly into their bank accounts, which means they're going to essentially straight into the dollar. And due to the fact that the primary goal of a lot of these meme coin creators is to increase their fiat wallets, they're pulling straight out. So their liquidity is not going back into Bitcoin. So I think there is a strong argument for, specifically the liquidity of essentially everything that's going into the Solana ecosystem not translating back into Bitcoin. So I think, it will have a negative impact across the entire board for cryptocurrency because you don't have that strong tie between Bitcoin and the rest of the market like you have had in previous cycles. I think that is also the reason why you are not seeing a traditional cycle in the altcoin space. And another thing to note here when we're talking about mining in particular, especially mining alternative cryptocurrencies, is previously when people were investing into cryptocurrency, they would send everything off to a centralized exchange. That's why large centralized exchange listings were important. And if they wanted to play around with an altcoin, they would take it out of their Bitcoin in the centralized exchange, put it in something on the CEX, CEX. And then that is why you would see the cycle bounce between essentially the crypto market or the Bitcoin price and then the alternative cryptocurrency price. But because Solana has pretty much taken over the entire alternative cryptocurrency market, and because there are direct on and off boarding options on the Phantom Wallet, and the Phantom Wallet has surpassed any other cryptocurrency application download on iOS and Android, there is not going to be this direct correlation, which means if you are mining other alternative cryptocurrencies that are layer ones, they have zero visibility to the rest of the market, which means your Radiant, your Kaspas, your Raven coins, all of these things have zero visibility to a majority of the liquidity within cryptocurrency right now. Because people aren't on those platforms. People aren't on ZEX, much less, right? They're not on even Coinbase or Binance. They're literally downloading the Phantom Wallet, gambling on meme coins, meme tokens, and then offboarding back to their fiat currency. That's what's happening, right? So then the question is, will we see, the same level of rise in the alternative cryptocurrencies that we saw in previous cycles? Will there be something that saves GPU mining specifically? And the answer to that might actually be no. So a rising tide raises all ships, but not on all shores, right? So the shore is moved. Does that make sense? I hope you enjoyed this clip from the Crypto Mining Show. If you would like to see more from this particular episode, take a look up here. Don't forget to also subscribe to the channel. And if you want to support me directly, you can go to sonofatech.locals.com and become a member. Thanks for watching, and I will see you next Tuesday.